The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. You can catch my show 5 days a week on TFNN from 3 to 4 Eastern, right in front of the Tom O'Brien Show from 4 to 6. The number to use is 877-927-6648. You can get my show as a podcast on iTunes if you can't listen live, so don't forget to check that out. And don't forget you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can listen to the show that way as well. And don't forget about Tiger TV. On the homepage of TFNN.com, Channel 1, the show is carried live. It is archived on Channel 13. Tiger TV is also viewable on your handheld device as well. And with Tiger TV, you can look at charts live right along with me. All right, checking in on the markets here. S&P 500 near its high for the day. Indices trading in a relatively tight range today. S&P 500 up close to 5.5 points to 1441, holding nicely above its 50-day moving average. Yesterday on the New York Stock Exchange, we had volume of 697 million shares. We are tracking lighter than that today. Not by much, though. NYSE volume tracking about 3 to 4% lower than what we saw Wednesday. Let's move over, take a look at the NASDAQ composite here. NASDAQ composite also up near its high, up a little more than 4 points. Not much movement in the tech index today, last trading at 3,048, but similar to the S&P 500, holding above its 50-day moving average here. NASDAQ volume tracking a little more than 10% lighter than the 1.83 billion shares that we saw yesterday. Money out of bonds, and actually, you know what? I gave you the wrong volume. Volume Wednesday on the NASDAQ was 1.89 billion, just to make sure we get this right here. We are still tracking lower on the NASDAQ, about 10% lower than Wednesday, but yesterday, 1.89 billion shares on the NASDAQ. NYSE volume yesterday, 746 million. We're tracking a little bit lighter than that today as well. Not much movement in bond yields here. The 10-year note mostly unchanged at 1.8%. The 30-year bond, 2.99%. The dollar mostly unchanged, not much movement there either. Down a hair to 79.26 at last check. Didn't get an official close on crude oil. Last I saw it was trading around $90.12 a barrel, up 14 cents on the session. And February gold takes another hit. February gold down $21.80 today, 1.3% decline to $16.45.90 an ounce. The GLD was not able to hold its 200-day moving average. Interesting technical action in the GLD as the selling really intensifies. The GLD has been under distribution for quite some time now. You started to see it in mid-October. It continued in November, and now it's really starting to pick up in the month of December here. So what the meaning is, I don't know, but gold is certainly acting weak here. The GLD is trading up near its session high after early weakness, but it is still down 1.3% on the day to 159.58. It hit an intraday low of 158.39. So gold remains under pressure here. Capitol Hill, what's new in fiscal cliff talks? Well, the White House has threatened to veto this Plan B proposed by House Speaker John Boehner, but Republicans are moving forward with a vote on Boehner's proposal to raise taxes on Americans earning more than $1 million a year. There still is some Republican opposition to that, so it's not a slam dunk that this gets through the House, but what is clear is that it's pretty much a non-starter in the Democratic-controlled Senate. So I'm not sure, exactly what the purpose of trying to push this through the House is when it's, I don't think in a Senate that's controlled by Democrats, it really is not going to make much ground here. So maybe it's just a statement by Boehner. I believe that vote is going on right now. Other news today. Let's take a look at shares of Google. Google, not much movement, up $1.93, 0.3% gain for Google to $722.04. Today, the Aris Group, actually, ticker ARRS, agreed to buy Google's cable TV equipment business. This is a business that it got as part of the acquisition of Motorola Mobility, but Aris Group is buying Google's cable TV equipment business for $2.35 billion. The deal is going to give Google a 16% ownership stake in Aris. So shares of Google not moving much on the news. Aris Group, let's see what Aris Group is doing. After early strength, it's trading near its session low. The stock did gap up on the news. It hit an intraday high of 1590, but it is now trading at 1491. Still up 2.5% on the day, but trading near its session low after early strength. Big merger announcement today. Intercontinental Exchange is buying the New York Stock Exchange. $8.2 billion cash and stock deal that values NYX at $33.12 a share. See what NYX is doing here. NYX. NYSE Euronext, it is, as expected, up close to 34% on the day to 32.20. You might remember in April 2011, the U.S. Justice Department blocked a joint bid by Intercontinental Exchange and NASDAQ. They wanted to acquire NYSE Euronext. This was at around the time that NYSE Euronext was trying to merge with Deutsche Börse, the German exchange. That merger was eventually rejected by the European competition authorities in February. So it looks like this deal is going to go through. Intercontinental buying NYSE Euronext. Let's take a look at Intercontinental Exchange here. ICE. Kind of a wild day of trading for ICE. It hits a high of 135.40, a low of 123.46. Last trading at 129.07, up 76 cents on the day. Not sure if this is a bad tick or not, but this is a very, very wide intraday trading range for ICE. Other news today. Let's check in on shares of Illumina, ILMN. Interesting story here. Nice gap up for Illumina. Clears a swing point just underneath $54 a share. The stock is up a little more than 7% to $55.90. Illumina is a DNA sequencing equipment maker. Swiss newspaper reported that Roche Holdings may be interested in acquiring Illumina for as much as $66 a share. That would be 48% higher than Roche's original bid. A lot of skeptical analysts out there that the bid would go as high as that, but apparently Roche is still interested. The last time Roche bid for Illumina called the offer just grossly undervalued the company. They weren't happy with the offer at all. So likely that Roche could come in with a higher bid here. Whether or not it's as high as $66 a share remains to be seen. Again, Illumina is only trading at $55.90 right now, up a little more than 7% on the day, but well below the $66 a share figure this Swiss newspaper reported. So Illumina having a big day today. Remember Oracle? We saw really nice earnings from Oracle late Tuesday. Nice gap up for the stock yesterday. This is exactly what a technical breakout looks like, and Oracle holding on to most of its gains today. It is only down 9 cents to 34. It announced a small acquisition. It's buying Eloqua, ticker ELOQ, for almost $900 million. The deal values Eloqua at $23.50 a share. Eloqua makes cloud-based marketing and revenue performance management software. So Oracle, definitely moving into the field of cloud computing to keep up with, big players like Salesforce and other names in the business. Let's take a look at ELOQ. Sure, it is having a nice day, and you see a nice gap up for Eloqua, up almost 32% to $23.58 a share. So we had this nice breakout from Oracle yesterday, and I wanted to take another look at Workday, WDAY, because Workday broke out yesterday, cleared a swing point of 53.68. The stock is up another 2.2% today to 56.34. So this one has the look of an emerging leader. The issue with Workday is that it's not profitable yet. It's probably going to be a little while before this company is profitable, but what they do have going for it is robust sales increases in recent quarters, and that is important to look at when you're evaluating a company. Profitability is always good to see. Again, Workday is still losing money, but when they last reported earnings, their revenues were up 99% from a year ago. They did $72.6 million versus $36.5 in the year-ago quarter. So nice technical setup here. Workday came public not that long ago. Came public in October 12th exactly, at $28 a share. You can see it has almost doubled from its offering price, but not surprising. This is a Workday is another cloud computing play. They do cloud-based applications for human capital management, payroll, time tracking, all that good stuff. So that's the deal there. Interesting call by J.P. Morgan Chase today. They initiate DVA, DaVita, with an overweight rating, set a $125 price target. DaVita actually changed its name, I think, to DaVita Healthcare Partners. This is another example of just a base-building stock here working on 5 straight gains. The issue you have with DaVita here, kind of technical analysis 101, when the stock started to correct in price in November, you can see a lot of distribution. See these big red volume bars here, and look at what it's doing as it's working its way higher. Really not much conviction behind the buying. And, you know, again, supply and demand is supply and demand. When you've got a lot of heavy volume on the downside and not much conviction behind the buying on the upside, it does make the base a little bit suspicious. It makes a technical formation. I'm a little wary about it. So it's still possible that we could see renewed signs of institutional buying in DaVita, but a lot of distribution on the left side of the base, not much in the way of accumulation on the right side. You know, that said, DVA could keep working its way higher. This is just a good example of what a base building stock looks like. So we'll keep an eye on DaVita. Other upgrades today, let's take a look at INXN. Ticker is kind of a mouthful here. This is a company called Intersion, data center services provider based in Europe. Working on the right side of a base here, very close to its late September high, around 2350. Maybe we see a handle area form here in INXN. That could set the stage for a breakout. It was initiated at neutral today by Goldman Sachs, 2550 price target. Ken Shreve with you on Breakout Investing. Folks, stick with me. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. You know, it really is going to be interesting to see what this market looks like when the fiscal cliff talks kind of move onto the back burner. You know, we get some resolution out of Capitol Hill. There's still a lot of, volatile back and forth headlines about, how these negotiations are going. What we know right now, at least in terms of the market today, indices are kind of bleeding here into the close. We've got a little more than 35 minutes left to go in Thursday's session. Right now, the Dow has given back some of its gains. It's only up 15 points right now, 13,267. NASDAQ close to break even here, only up a little more than 1 point to 3,045, and the S&P 500 up about 4 points to 1440. So it is going to be interesting. I mean, everybody talks about this January effect where, January is typically a good year for stocks, but we've seen some Januaries in recent years where, this rally happens into December and then we get some selling in the month of January. So, what happens if we get a palatable resolution to this to the fiscal cliff talks? Does the market sell the news? I mean, a lot of good news has been built in pretty quickly here. I'm still optimistic about the rally here. I've been talking about the fact that, since December 11th, when the NASDAQ gapped above its 50-day moving average, that was a good day of accumulation right there. And then earlier this week, on Monday and Tuesday, we had 2 days of accumulation as well in the tech index. So starting to see subtle signs that new money is coming in from the sidelines. I'd like to think it's more than window dressing as we head into the end of the fourth quarter here. Like to think that this bull market still has legs. Certainly been encouraged this week by the number of technical breakouts, or at least an increasing number of technical breakouts. Large cap stocks like Goldman Sachs, ticker GS. When you look at the financial sector as a whole, this could be a nice pocket of leadership as we get ready to turn the calendar into 2013. So Goldman still behaving well after its breakout, and then a lesser known name, recent IPO called Everbank Financial. This is a stock that's working on the right side of a base. It has a different technical look to Goldman. Goldman has broken out. This one hasn't yet, but it hit a low of 1375 back in November. It is now trading at 1498. Looks like it's going to try to retest its previous high of 16, but good fundamentals here at this Jacksonville-based bank. Has been a very, very strong performer since its IPO. So financials, look pretty good here. This could be an area of leadership in 2013. So I'm long 4 stocks, I think, in the Ultimate Growth Stocks model portfolio. It might be 5 at this point, but so I have some long positions on, and actually they're working nicely. They're working nicely, and so I don't mind being long this market at all, and I'm staying optimistic that this rally could amount to something, and at the very least, maybe these highs the market set back in September, maybe we can retest them and perhaps break out to the upside. So we'll see. We'll see how that all plays out. Busy day of economic data today. Weekly jobless claims up 17,000 to 361,000. The estimate was for a much smaller increase to 345,000. So a larger than expected jump in weekly jobless claims. The third estimate to third quarter gross domestic product came in much higher than expected. Very interesting data here. The estimate was for growth of 2.7%. It came in at 3.1%, helped by exports and government spending. So a lot of people projecting sluggish GDP growth in the fourth quarter of this year. I've seen some people saying 1% growth in the fourth quarter, and then when you look out into 2013, the consensus estimate, the Fed, other economists are looking for economic growth of for all of 2013 of 2% or so. I think there's a chance we probably could come in a little higher than that. Those are probably. The crowd definitely seems to be leaning heavily towards that 2% number, but this economy has shown in the past a tendency to surprise to the upside. So maybe 2.5-3% growth next year isn't completely out of the question. More housing data today. Remember, yesterday we had a bigger than expected drop in November housing starts. Yesterday, permits, the good news, came in better than expected. That was data from yesterday. Today, existing home sales. Nice jump here, better than expected, up 5.9% in November to 5.04 million units. The estimate was for 4.9. Inventories declined 3.8% to 2.03 million units. In the South, sales rose 7.9%. 7.2% gain in the Midwest, 6.9% in the Southeast, and the West bringing up the rear, only 0.8% gain. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Finishing up a rundown of economic data today. So weekly jobless claims up a little more than expected. Third quarter gross domestic product up. Revised much higher than expected at 3.1%. That's good news. Bigger than expected jump in existing home sales for November. And one more piece of economic data that came in quite good: the December Philadelphia Fed Manufacturing Index, specifically the Business Outlook Index, up 8.1 after a negative 10.7 reading in November. That minus 10.7 in November was particularly horrendous. The estimate for December was a reading of plus 1. It came in at plus 8.1, so good news from the Philly Fed earlier today. Mentioned the fact that I'm encouraged by the number of heavy volume technical breakouts in the market. If you're a growth investor, you got to like the action in Amazon.com. Nice breakout earlier this week, over $255 a share. A low volume decline yesterday. Stock is back up near its session high today, up 1.2%, 261.07. Also, Rackspace Hosting. Powerful breakout earlier this week on Tuesday, holding gains nicely. What I also like is that I'm seeing plenty of bullish technical setups taking shape. Mentioned, EVER, Everbank Financial, EVER. I think I've got that name right. I know the ticker is, Everbank Financial. Mentioned that as a good example of a base building stock here. We'll go ahead and take one more look at it. If you're watching in Tiger TV, right side of the base forming here. And you've got a lot of other, technical setups out there that are, that are working as well. Let's take a look at Michael Kors, which is Kors. This is a stock that I believe has pretty good potential in 2013. Working on 5 straight gains here, back above its 50-day moving average. Another base taking shape. So, yeah, the market has dished up some breakouts, but there are plenty more that are revving their engines, so to speak. And if we continue to see signs of accumulation in the major averages, a lot of these base-building stocks could eventually, a lot of these positive technical setups could make some good headway. So we'll keep an eye on Michael Kors. Let's see, Time Warner Cable, another base taking shape here, right side of a base, taking good shape here. So plenty of good technical setups to have on your watch list here. And I think that's another reason to be optimistic about this market. Taking a look at some earnings reports today. You'd think it'd be pretty quiet in terms of earnings, but that's not necessarily the case. Let's look at CarMax here. Big move for CarMax. 9% gain to $37.97. $37.97 last price on CarMax. Earnings were up 14% to 41 cents a share, 2 cents above estimates. Sales up 15% to $2.6 billion. That was also above expectations of $2.47 billion. In mid-October, CarMax broke out over a swing point of 33.38. Okay, here was the breakout right here, but then you can see, I think it was November 2nd and November 6th, 2 reversals here, kind of ugly action after the breakout. So not exactly the easiest stock to buy, because if you bought that breakout and you see that bearish price action 2 days out of 3, and then it falls in price, it rallies, starts to rally back, and then a gap up today. So not an easy stock to buy. But it is outperforming nicely today. A little bit of short covering here. Short interest is relatively high in CarMax based on its average daily volume of about 2.2 million shares a day. At the end of November, short interest was at 12.1 million shares, but that was down from 15.3 million at the end of June. So over the past 6 months, short interest has been steadily declining in CarMax, still on the high side. So you got a little short covering today, but definitely some institutional buying as well. So nice earnings from CarMax today. Let's take a look at shares of Accenture, ACN. This was another stock working on the right side of a base here, but looked pretty good. There was some positive thoughts that earnings would be pretty good from Accenture, but not a good day for the stock, down 2.2% to 68.82. It's doing pretty well considering it hit an intraday low of 66. It is trading up near its session high, but still down 2.2%. Earnings were up 10% to $1.06 a share. 2 cents above estimates. Sales only up 2%. You've got several quarters in a row now of decelerating sales growth, where the rate of growth is slowing for consecutive quarters in a row here. So that's never a good sign. Sales up 2% to $7.22 billion. A little bit below estimates there as well. Revenue from consulting, which is the company's biggest unit, fell 3% from a year ago to $3.96 billion. Outsourcing sales rose 9% to $3.26 billion. So that's the 411 on Accenture. How about, Bed Bath & Beyond has been in a technical downtrend for quite some time, and right when you think all the bad news is priced in here, think again, the stock is down 6.7% today to 56.24. They reported earnings that were up 8% to $1.03 a share, penny better than views. Sales up 15% to $2.7 billion. That was mostly in line, maybe a little bit below expectations. Same-store sales disappointing, only up 1.7% compared to a 4.1% rise in the year-ago quarter. So a big deceleration in same-store sales growth. News that the board authorized a new $2.5 billion share repurchase program is not helping Bed Bath & Beyond at all. it is just a technical mess here. I would not touch this stock. Too many big sellers in Bed Bath and Beyond. Darden Restaurants, another stock that's having a hard time here. Also in a downtrend, it is down 2.9% today to 45.46. Darden has Olive Garden, Red Lobster restaurants, casual dining chains. Earnings were down 37% from a year ago to 26 cents a share, in line. Sales up 7% to $1.96 billion. That was also in line. Company's been revamping menus, new ad campaigns. They're really not helping same-store sales. Fell 3.2% at its Olive Garden locations in the quarter, and 2.7% decline at Red Lobster locations. So tough executing environment for Darden Restaurants. Tough to say what the future holds for this company, but it has fallen on hard times for sure. Discover Financial Services. Let's take a look at DFS. Discover Financial Services also having a rough day, kind of flailing around at its 50-day moving average. Earlier this week, it is now convincingly below the 50-day line. Its 200-day moving average could be in play here at 36.14, but the stock is down 3.9% to 38.22. Earnings up 13% here to $1.07, below estimates. Sales up 7% to $2.3 billion. That was above estimates, but sellers still in the stock today in spades. Outperformance of the home builders, tough to ignore in recent months. KB Home working on a base ahead of earnings today, but sellers in the stock down 7% to $15.51. A lot of home builders have returned to solid earnings and sales growth in recent quarters, but KB Home, they beat estimates by 3 cents with earnings of 10 cents a share, but that was down 44% from a year ago. Sales were up 20% to $578 million. About 10-11 million better than the consensus estimate. So the number's pretty good, but KB Home trying to hold on to its 50-day moving average here. Again, trading at 15.51. Its 50-day line is at 15.34. And finally, really, really busy in terms of earnings today. Neogen is an interesting company. They make testing kits, products for food and animal safety. Recent breakout over 43.66. This was back in November for Neogen. And, stock is still showing relative price strength, not having a bad day at all today, up 30 cents, 0.6% gain to 46.90. Earnings were up 27% to 28 cents a share, 1 cent better than the consensus estimate. Sales up 13% to $50.7 million, a little bit below estimates, but good support out there for Neogen as it continues to hold near highs. Checking in on shares of Regeneron Pharmaceuticals. This is a interesting company here. It has been in a consolidation really since late November, early December, but looking intent on testing its 50-day moving average here down at 163. The stock is down 1.1% today to 173.66. So it still has another 10 points to get to its to get down to its 50-day moving average. It's a strong enough stock where I wouldn't be surprised to see it find support here. Either way, it's a stock that is basing, and typically don't like to buy stocks when they're consolidating gains. Much rather wait for the left side of the base to form and then wait for the stock to start moving higher, retest its prior high, and look for signs of institutional buying when that's happening. So Regeneron still in the early stages of a consolidation here, trading up near its high, but still 1.1% lower on the day. Regeneron's key drug is Eylea, which is used to treat wet age-related macular degeneration. That's the leading cause of blindness in elderly people. Another stock looking very vulnerable here. One-time leader, CF Industries. CF Industries, you can see the stock is down $1.82 today to $203.84. And I'm going to swing over, take a look at a weekly chart for CF Industries. I know the stock still has its fans, but you're looking at several weekly declines in a row. In fact, I mean, you're talking all the way back since August, September. The stock shows only 2 up weeks, several down weeks, and this is a stock. It's still holding above its 40-week moving average at 196, but at 203.85, I wouldn't be surprised to see a test of that 40-week moving average, and also wouldn't be surprised to see a break below that support level, because sellers are still in this stock, and lack of buying demand very easy to see in CF Industries at this point. This is a company that makes nitrogen and phosphate fertilizers. Looks vulnerable here, even though it is holding above support still at 196. Wanted to take a look at a couple of other breakouts here. Toyota. Toyota, not a stock I talk about very often, but when you look at a weekly chart here, just a beautiful technical breakout for Toyota. This is what you want to see when there are signs that new money is coming in from the sidelines. You want to see breakouts like this. Shares of Toyota recently trading around 92.47. Good solid breakout for the stock recently. A little bit of juice behind that breakout as well. So Toyota Motors looking stout here. And also Akamai. Akamai is another one. They make gear that basically speeds up delivery of content over the internet. Little breakout here, over $40 a share, working on its fourth straight weekly price gain, but under accumulation. And this is an interesting stock out there that still could be in the early stages of a move here. So that is what's going on with individual stocks. I mentioned some setups out there that still look good. I think there are still stocks out there that could continue to lead this market higher. Time Warner Cable, you can see 4 or 5 weeks in a row, working its way higher. Hit a low just underneath $90 a share, but it is working on another weekly price gain today. Last trading at 97.16. This is an example of a base forming, the right side of a base forming. This could work. And Liberty Media, LMCA. We'll look at a daily chart for Liberty Media, and you can see 5 up days in a row. This is an example where I would like to see a handle area form. This is not quite straight up off the bottom, but successive daily price gains like this, you always like to see one last shakeout before a breakout. Volume has dried up over the past 2-3 trading sessions, so it's kind of flirting with a breakout here. Would be better to see a low volume shakeout, but Liberty Media, a strong stock out there. And same industry group as Liberty Media. Let's take a look at CBS. This is a pretty strong group overall. CBS outperforming nicely today, up 3% to 37.51. This is another one flirting with a breakout, but again, after 4 straight gains for the stock, let's see if we can get a little shakeout here, where last remaining sellers exit the stock, and that could pave the way for a breakout as well. And as we head into our final break here, I want to take a look at a good turnaround story in the retail sector. Urban Outfitters, like the technical look here as well. Again, working on 6 straight up days. Does it form a little handle area here? And if it does, maybe we see a breakout. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. 5 minutes left to go in Thursday's session. The Dow rallying back close to its session highs here, up 24 points, 0.2% gain to 13,276. The S&P 500 also rallying back here close to its session high, up close to 5 points now to 1440, and the NASDAQ Composite. Let's see what the NASDAQ Composite is up to. Also, fairly tight range for the NASDAQ, up near its session high, only up 2 points, though, to 3,046. So that's where we're at with the major averages here. And folks, don't forget to check out 30 days absolutely free of Ultimate Growth Stocks. Have some exciting stocks in the model portfolio, several stocks on the watch list as well. Not in a big hurry to, just be aggressively buying every day in this market. Just have 4 or 5 stocks right now, and letting them work, and they are working, so that's a good thing. But still a little bit unsure on where we're at with this market. Again, I've been encouraged by recent price and volume trends in the major averages. On the one hand, the market does feel like a coiled spring. If you do get some positive developments out of Washington, we could easily continue higher. I still think there's money on the sidelines that wants to come in. And, again, when I look at all the growth stocks in my screens and I see a lot of good technical setups out there, stocks that are just kind of bursting at the seams, they're ready to go. That also makes me confident. But I also know that this is a headline-driven market, and it's a fast-moving market, and a negative headline could easily bring sellers in here as well. So still treading cautiously, erring on the long side here. And we'll see. We'll see what happens. But if you want to try 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Click on the newsletters tab right on the top of the homepage. After that, click on investment newsletters, and you'll see Ultimate Growth Stocks right in there. 30 days free, so you can get familiar with my approach to the market. I publish every Tuesday an extensive weekly update, and then I send out email buy and sell alerts in between. Today I sent out an alert just commenting on the general market, added some stocks to the watch list, so really just try to keep subscribers abreast of what is happening. After the close today, got some high-profile earnings reports due. Let's take a look at Research in Motion ahead of earnings. Still showing incredible relative price strength here. Research in Motion up another 3.4% today to 14.09. BlackBerry 10 is due in late January. A lot of optimism about that new product offering. The numbers for Research in Motion are not going to be that great. They're expected to report a loss of 35 cents a share, with sales down 49% to $2.65 billion. But it has been an impressive move for Research in Motion. Remember, this was a $9 stock back in early November, now trading at $14.09. And you can see these volume bars at the bottom here. This is not a low volume move from 9 to 14. It is a stock that is showing pretty serious signs of accumulation. Also, after the close, we've got earnings from Red Hat, RHT. We'll check in on Red Hat ahead of earnings. Working its way higher, still deep inside a base here. I expect that 54.38 level, the 200-day moving average, could be resistance. But if numbers impress, get a gap up, maybe it'll take that level out pretty easily, but still technically challenged stock here. Red Hat up 40 cents to 52.60 ahead of earnings. Numbers here, 29 cents a share is expected, up 4% from a year ago. Sales up 17% to $338 million. Also watching for Nike after the close as well. Coming up next, the Tom O'Brien Show. I'll see you back here. One more day left of trading, Friday. Back here tomorrow, 3 o'clock Eastern. Take care, folks.